Welcome to the Deep Dive. Today, we're diving into the world of business.
Yeah, using your notes from a business course.
About organizations, stakeholders, all those fascinating forces.
Yeah.
The ones that shape their success.
Looking at different types of organizations.
The key players involved.
Even how companies analyze their strengths.
And weaknesses. Buckle up.
It's going to be a fascinating ride.
Through the business ecosystem. So, first things first. What exactly is a business organization? Your notes define it as a social arrangement, which pursues collective goals, controls its own performance, and has a boundary separating it from its environment.
Yeah.
That sounds pretty formal.
It does, a little.
But I'm guessing there's like a more exciting way to think about it.
Definitely. Imagine trying to build a car. All by yourself. It would take forever, right?
Yeah.
Organizations exist because they bring people together.
With different skills.
Yeah, different skills and resources, allowing them to achieve things they couldn't do alone. Like increased efficiency. Specialization. And, the power of teamwork.
Like a well-oiled machine.
Yeah.
With each part contributing to the final product. And your notes mention some really diverse examples.
Oh, yeah.
Of organizations. From, like, giants. Like Ford.
Yeah.
To charities like Oxfam. And even the Army.
Wow.
That's pretty mind-blowing.
Yeah.
When you think about it.
Absolutely. The sheer variety of organizations out there is a testament to the power of collective action. Now, let's break down these different types of business organizations.
Lead the way.
First up, we have commercial organizations.
Yeah.
Think of your local bakery.
Yeah.
Tech startups aiming for, the next big IPO.
IPO, right.
Or massive corporations like Amazon. Their primary goal is to generate profit. Within this category, you have sole traders, partnerships, and limited liability companies.
Speaking of limited liability,
Yeah.
that sounds like a pretty big deal.
It is.
For entrepreneurs.
Yeah.
What are, like, the practical implications of this? When someone's deciding between a sole proprietorship and an LLC.
That's a great question. Limited liability is, it's a game changer. It basically means that if the business goes south, the owner's personal assets, like their house or car, are protected.
In a sole proprietorship, there's no such separation.
Right.
So for many entrepreneurs, the limited liability offered by an LLC provides peace of mind.
For sure.
It's like a safety net for risk takers. Now, not every organization is chasing profits, right?
Right. Not-for-profit organizations like charities and hospitals.
Hospitals,
They focus on social good. Think of organizations like the Red Cross.
Or Doctors Without Borders.
Their bottom line is making a difference.
That's it.
In the world. Then we have public sector organizations.
Yeah.
Those run by the government.
Right.
To serve the public. The post office, public schools.
Yeah.
Even NASA falls into this category.
Exactly.
And then there are non-governmental organizations.
Yes.
Or NGOs.
NGOs.
These are international not-for-profits.
Yes.
Often focused on global issues.
Right.
Like poverty. Human rights. Or the environment.
Yeah.
It's inspiring to see so many people.
It is.
Working to make the world a better place.
Yeah.
Now we can't forget about cooperatives.
Cooperatives, right.
Those businesses owned and run by their members.
A great example is a farmer cooperative. Where farmers pool their resources.
Oh, hi.
For better bargaining power. And access to markets. It's a great example of strength in numbers. Now, no matter the type
of organization, they all share one crucial element: stakeholders.
Stakeholders. They're the individuals.
Yes.
Or groups who can impact the organization.
Yeah.
Or be impacted by its actions. I bet we can all think of stakeholders.
Oh, yeah.
In our own lives.
Absolutely. You can break them down into three main categories. Internal stakeholders. Are those within the organization.
Like
employees, managers, the CEO, everyone working towards those collective goals.
They keep the lights on.
Yes.
And the wheels turning.
Yeah.
What about the folks outside the organization?
That's where connected stakeholders come in.
Connected stakeholders.
They have a direct contractual link to the organization.
Okay.
Like suppliers providing raw materials,
Right.
customers purchasing products, shareholders investing capital,
Right.
and lenders providing financing.
Okay.
Each one plays a crucial role.
It's like an intricate web of relationships.
It is.
But aren't there also people or groups who don't have a direct contract, but are still affected by the organization?
Exactly. External stakeholders are those outside the organization without a direct contractual link, but who are still impacted by its operations. This might include the local community, government agencies, or even activist groups.
Oh, okay.
Think about like a factory.
Yeah.
That pollutes a nearby river.
Right.
That would definitely affect the community, even if they aren't directly involved with the factory.
It's a powerful example.
Yeah.
It seems like things could get tricky.
Yeah.
When the interests of these different stakeholders collide.
Yeah.
Is there like a model that companies use?
There is to navigate this.
Yeah.
One useful tool is the Mendeley matrix.
A Mendeley matrix.
It's a way of mapping stakeholders based on their power to influence the organization and their level of interest in its activities.
So we're talking about like how much influence they have and how closely they're paying attention to what the organization is doing. But isn't the Mendeley matrix a bit simplistic? Don't stakeholders sometimes shift their positions?
Yeah.
Based on the issue at hand.
You bring up a great point. While the matrix is a helpful starting point, it's essential to remember that stakeholder dynamics are fluid. A stakeholder who might be passive on one issue could become highly active on another. That directly affects them.
So it's a dynamic map.
Yeah.
Not a static one.
Precisely. Now, within this web of stakeholders, one of the most crucial relationships to understand is the agency relationship. This primarily exists between shareholders, the owners of the company, and the directors or management who run it.
So in this relationship, shareholders are hoping for a return on their investment. And directors are making decisions that impact those returns. It sounds like there's potential for conflict there.
Exactly. Sometimes the interests of directors and shareholders aren't perfectly aligned. Your notes mention examples like directors awarding themselves excessive bonuses or pursuing risky ventures that could jeopardize shareholder returns. This potential for conflict is known as the agency problem.
That makes sense. So what are some ways companies can like align the interests of shareholders and directors? Are stock options always a good solution?
That's a complex question with no easy answers. Stock options can be, a powerful tool to incentivize directors to act in the best interest of shareholders. But they can also backfire if structured poorly. Other mechanisms include independent boards of directors, strong corporate governance practices, and active shareholder engagement.
It seems like a constant balancing act.
It is.
Now, this brings us to another fascinating aspect of the business world. The fact that organizations don't operate in a vacuum. They're constantly influenced by the external environment.
You're spot on. And one of the most widely used frameworks for analyzing this macro environment is the PESTEL analysis. It stands for political, economic, social, technological, ecological, and legal factors.
I'm guessing each of these areas can significantly impact how businesses operate.
Yes.
Do you have like a real-world example?
Absolutely.
Of how this plays out?
Take the recent global pandemic. The political decisions regarding lockdowns and border closures had a massive economic impact on businesses worldwide. Supply chains were disrupted. Consumer behavior changed dramatically. And entire industries had to adapt. Or face collapse.
That's a stark reminder.
It is.
Of how interconnected everything is. So we've got political and economic forces. What about the S in PESTEL?
The S stands for social factors.
Social factors.
Things like cultural trends, demographics, and consumer preferences, these can have a huge impact on the success or failure of products and services.
Yeah.
Remember when low-fat foods were all the rage?
Oh, yeah.
Companies that didn't adapt to that trend were left behind.
It makes sense. You can't sell what people don't want to buy. Now technology seems to be changing everything these days.
It is.
What kind of impact does that have on businesses?
Technology is it's a game changer.
Okay.
Creating both opportunities and threats.
Right.
The rise of e-commerce has revolutionized retail, while social media has become, a powerful marketing tool.
Right.
And then there's artificial intelligence and automation, which are transforming industries and job markets alike.
It feels like we're living in a science fiction novel sometimes.
I know.
Okay, we've covered political, economic, social, technological. What about the E and the L in PESTEL?
The E stands for ecological factors.
Okay.
And it's becoming increasingly crucial.
In what way?
Climate change.
Right.
Pollution.
Yeah.
And resource scarcity are forcing businesses to rethink their practices.
To become more sustainable.
Yeah, to become more sustainable.
Okay.
Consumers are demanding eco-friendly products and holding companies accountable for their environmental impact.
It's no longer just about profit. It's about purpose, too. What about the legal landscape?
The L in PESTEL stands for legal factors.
Legal factors.
Laws and regulations governing everything from labor practices.
To environmental protection, to data privacy.
Right.
Businesses need to stay informed and compliant.
Yeah.
Or risk facing, hefty fines and reputational damage.
It's like navigating a minefield of rules and regulations.
It can feel that way sometimes. But remember, understanding these external factors is crucial for any business to thrive.
This has been such an insightful look into the macro environment. But how do companies analyze the competitive landscape within a specific industry?
Yeah, that's a good question.
That's where we'll pick up in part 2 of this deep dive.
Welcome back. It's fascinating how we can analyze a single company's strengths and weaknesses.
Right.
But what about the forces that shape competition?
Across
an entire industry. That's where the concept of industry attractiveness comes in.
Right. We talked about different types of organizations.
Yeah.
And their stakeholders.
Yep. But now we're zooming out to look at the bigger picture.
Yes.
So what exactly does industry attractiveness mean?
Okay.
Does it just mean, how much money a company can make?
It's more nuanced than that.
Okay.
Industry attractiveness refers to how easy a business will find it to make reasonable profits.
Reasonable profits.
Well, not just any profits, but profits that are, substantial enough to reward investors for the risk they're taking.
Right.
And allow the company to reinvest and grow. Think of it like this.
Okay.
Would you rather invest in a company in a booming industry with lots of growth potential, or one in a declining industry with cutthroat competition?
I'm guessing most investors would choose the booming industry. So how do companies figure out which industries are attractive? Is this where Porter's 5 forces comes in?
You got it.
Okay.
Those 5 forces. The threat of new entrants, the threat of substitutes, the bargaining power of buyers, the bargaining power of suppliers, and the intensity of rivalry among existing competitors.
Okay.
They all contribute to determining how attractive an industry is.
Okay.
Let's take the airline industry, for example.
Okay, the airline industry. Everyone loves a good travel deal.
I know.
What would a 5 forces analysis reveal about this industry?
Well, the airline industry is notorious for its intense competition.
Okay.
You have all these established players like Delta, United, and American Airlines constantly battling for market share.
Okay.
And the barriers to entry are pretty high.
In what way?
You need massive capital investments to acquire aircraft, secure those coveted landing slots at major airports, and navigate complex regulations.
Plus, there's the whole issue of brand loyalty.
Right.
People often have their preferred airlines.
Yeah.
Making it even harder for newcomers to break in.
It is.
So it sounds like airlines face
a
lot of competition.
They do.
What about the customers?
Yeah.
Do they have much bargaining power?
Absolutely. With online travel agencies like Committer and Kayak and price comparison websites.
Yeah.
Consumers have a lot of transparency.
Right.
They can easily shop around for the best deals, which puts pressure on airlines to keep their fares competitive.
Okay.
This can really squeeze those profit margins.
It's a race to the bottom.
It is.
On price.
Yes.
What about the suppliers?
Yeah.
Do they have any leverage in this situation?
Oh, they definitely do.
In what way?
Think about the major aircraft manufacturers, like Boeing and Airbus.
Yeah.
They have significant leverage because there are only a few major players.
Right.
The same goes for the companies that supply jet fuel. They can have a big impact on airline costs.
Which ultimately affects profitability.
Exactly.
So the airline industry seems like it faces challenges.
It does.
On multiple fronts.
Yeah.
From intense rivalry to powerful suppliers.
Yeah.
And price-sensitive customers.
It's tough.
Are there any industries out there that are considered highly attractive? You know, the ones with lots of profit potential.
There are.
Okay, like...
Think about industries.
Yeah.
With high barriers to entry.
Okay.
Low bargaining power of buyers and suppliers. Limited threat of substitutes.
Okay.
And relatively low rivalry.
Okay.
For a while, the pharmaceutical industry was considered highly attractive.
Because?
Developing new drugs requires significant research and development. And there are strict regulatory hurdles to clear. Which limits competition.
And people rely on those medications.
They do.
So they're probably less price sensitive.
Yes.
Compared to, say, choosing between different brands of soda.
Right.
So if I'm understanding correctly, some industries are inherently more profitable than others.
Yes.
Due to these structural factors.
That's exactly right. Of course, it's not always that clear-cut.
Okay.
Industry attractiveness can change over time.
Yeah.
As new technologies emerge, consumer preferences evolve, or regulations shift. Remember Blockbuster Video?
Oh, yeah.
They were once dominant, but then streaming services like Netflix came along and completely disrupted the industry.
That's a perfect example.
It is.
Of how things can change quickly.
Yeah.
It makes you wonder what industries are going to be like the next big thing. So we've talked about how companies create value through their value chains and how industries vary in their attractiveness. But how does a company actually decide what products or services to offer and how to position themselves in the marketplace?
That's where strategic decision-making comes in.
Okay.
Companies need to figure out how to leverage their strengths and capitalize on opportunities.
Okay.
One approach is called a resource-based view.
A resource-based view, what does that mean?
It means looking inward.
Okay.
And identifying what a company does really well. What are its unique strengths? It could be like a talented workforce.
Okay.
A strong brand reputation. Proprietary technology.
Okay.
Or efficient processes.
Okay.
Then the company builds a strategy around those strengths.
Okay.
For example.
Yeah.
If a company has a top-notch engineering team.
Okay.
They might focus on developing innovative products that leverage that expertise.
So it's about like playing to your strengths.
Yes.
Like a basketball team focusing on its star player.
Okay.
Another approach is called a positioning-based view.
Okay.
This is all about finding a desirable position in the marketplace.
Okay.
And then tailoring your offerings to meet the needs of that target market.
Right.
If a company sees an underserved niche, they could develop products or services specifically designed for that group.
Like a company realizing that there aren't enough vegan restaurants in a particular city and deciding to fill that gap.
Exactly.
Okay.
It's about finding that sweet spot
where
your capabilities align with market demand.
So how does a company figure out what its core strengths are? And what opportunities exist in the market.
Yeah.
We've talked about SWOT analysis before. Does that play a role here?
Absolutely. Remember, SWOT analysis helps you identify your internal strengths and weaknesses, as well as external opportunities and threats.
Yeah. Right. It's like taking inventory of your resources and the competitive landscape. But it's not just about, listing those factors. It's about using that information to make strategic decisions.
So a company might realize through a SWOT analysis that they have a strong brand, but are weak in online marketing.
Okay.
This could lead them to invest in developing their digital presence.
Exactly. Well, a well-executed SWOT analysis can reveal whether a company should focus on exploiting existing strengths or developing new ones. Whether they should pursue opportunities aggressively or proceed with caution.
It's all about matching your internal capabilities with the external environment to create a winning strategy.
That's a great way to put it. Now, speaking of the external environment, we can't forget about the impact of those macro environmental forces. We talked about earlier with PESTEL. Those political, economic, social, technological, ecological, and legal factors.
Those forces can shape entire industries and impact even the most successful companies. We saw that with the pandemic, how it forced businesses to adapt in ways they never imagined.
Absolutely. Companies need to be aware of those trends and adapt their strategies accordingly, for example. If there's a growing trend toward sustainability, companies might need to invest in eco-friendly practices or risk losing market share to competitors who are perceived as more environmentally responsible.
Consumers are becoming more conscious of the impact their choices have, and businesses need to keep up.
Exactly. These macro environmental forces can also create entirely new opportunities. Think about the rise of e-commerce. It's transformed the retail landscape, creating opportunities for new players to enter the market and forcing traditional brick-and-mortar stores to adapt. Or risk becoming obsolete.
It's a constant game of chess.
It is.
Where companies need to anticipate those moves and position themselves strategically to stay ahead of the curve.
And that's what makes the business world so dynamic and fascinating. There's always something new happening, and companies need to be ready to adapt and evolve.
This has been such an eye-opening exploration.
Yeah, it has.
Of how companies analyze industries, their competitors, and those powerful sources shaping the business landscape. In part 3, we'll bring all these pieces together and highlight some key takeaways for navigating this ever-evolving world. It's been quite a journey.
It has.
Exploring the business world, wouldn't you say? We've gone from, like, the nuts and bolts of what a business organization is to analyzing those powerful forces shaping entire industries.
It's a lot.
I feel like I've learned a whole new language.
It's like we've been peeling back the layers of an onion. Revealing the complexity and interconnectedness of this, this fascinating ecosystem.
Exactly. And if there's one thing that's become, like, crystal clear, it's the importance of information. Companies need to gather data, analyze trends, and use that knowledge to, like, make informed decisions.
Absolutely. But it's not just about collecting data for data's sake. It's about turning that data into actionable insight.
That can
drive strategy and guide decision-making.
It's like having a powerful telescope. But if you don't know where to point it or how to interpret what you're seeing, it's not very useful.
Exactly. That's where those frameworks and models we've been discussing come in handy. They provide, like, a structure for analyzing information and making sense of this complex business landscape.
So, like, Porter's 5 forces. PESTEL analysis. SWOT analysis. These are all tools that can help businesses understand their environment and position themselves for success.
For sure.
So if we had to, like, distill all of this down to a few key takeaways for our listener, what would you say are the most important things to remember?
First, I think it's crucial to understand the different types of business organizations and the roles that stakeholders play.
Right.
Whether you're an employee, a customer, an investor, or just someone who, interacts with businesses on a daily basis.
Right.
Knowing how these organizations work is essential.
It helps you see, like, the bigger picture.
Yes.
The web of relationships and motivations that drive business decisions.
Second, I would emphasize the dynamic nature of the business environment.
Okay.
Both the competitive landscape and those broader macro environmental forces we talked about are constantly changing.
Right.
Companies that can adapt to those changes, that embrace flexibility and innovation are the ones that will thrive in the long run.
It's like surfing.
Right.
You need to adjust to the waves.
Yeah.
Be agile and find your balance to stay afloat.
That's a great analogy.
Yeah.
And finally, I would highlight the importance of strategic thinking.
Strategic thinking.
Using frameworks like SWOT analysis and Porter's 5 forces can help companies make informed decisions about how to allocate resources, position themselves in the market, and achieve their goals.
It's about being proactive.
Yeah, proactive.
Anticipating challenges.
Yes.
And seizing opportunities as they arise. Not just reacting, but shaping the future.
Exactly.
Yeah.
It's about making informed choices, understanding the forces at play, and using those insights to chart a course for success.
This deep dive has been such an eye-opening experience.
It has.
I feel like I have a much deeper understanding of how businesses operate, the factors that contribute to their success, and the tools they use to navigate this complex world.
I hope so. Remember, the business world is constantly evolving. What worked yesterday might not work today.
Right.
And what works today might not work tomorrow.
So it's about being adaptable.
Yes, adaptable.
Curious. And always willing to learn.
Exactly. So keep exploring.
Okay.
Keep asking questions.
Right.
And never stop learning. The more you understand about the business world, the better equipped you'll be to, make informed decisions.
Yeah.
Whether you're like an entrepreneur, an investor, or simply a curious observer.
What fantastic advice. This has been an incredible journey.
It has.
And I want to thank you.
Oh, you're welcome.
For sharing your expertise with us.
It's been a pleasure.
And to our listener. Thank you for joining us on this deep dive into the fascinating world of business. Until next time, keep exploring, keep learning, and keep diving deep.